light of the news cycle being consumed by former President Donald Trump's criminal conviction, investors are left to wonder if the forthcoming election will deviate significantly from the status quo. The United States electoral system is threatened with a crisis of legitimacy, which could result in a decline in confidence in U.S. financial markets and the U.S. dollar. It astounds the media that Trump's continued popularity among voters has not been impacted by his legal issues. Indeed, Trump is ahead of incumbent Joe Biden in most swing states in the polls. Should the election be conducted at present, the result would be too ambiguous and the contestation would be too intense to persuade followers of the defeated candidate to concede to the results. Trump supporters contend that the New York criminal justice system, which is under the Democratic authority, is attempting to determine the outcome of the national election. There is a potential for Trump to be prohibited from conducting campaign rallies if he is incarcerated or placed under house arrest. The extent to which a re-Trump administration would substantially alter fiscal or monetary policy remains uncertain. During his first tenure, he seldom exercised his veto power to prevent Congress from incurring deficit spending. Notwithstanding certain endeavors to exert influence over the central bank, he ultimately selected Jerome Powell, an establishment insider, to preside over the Fed, a choice he later lamented. Investors in the stock market might be more concerned, given that Wall Street abhors ambiguity. The election may give rise to a constitutional crisis or social disturbance, both of which have the potential to precipitate an unpredictable decline in the stock market. This year, renewed investor interest in gold has contributed to the metal reaching all-time highs. For $2,355 on the final trading day of May, gold is trading marginally below its all-time highs. Although the gold USD trades at a record high level, the recent price failed to show a continuation pattern. Instead, a divergence is formed with the MACD signal line, creating a short-term bearish signal. In that case, a bearish continuation below the 20-day EMA line could be a potential short opportunity, aiming for the 2,278.30 resistance level. However, any immediate bullish reversal above the 2,365.00 level might resume the trend.